All right, what's going on, guys? Let me why is the screen like that? All right. Good morning, good morning. What's going on, guys? So, this so let me break this down what I'm watching for going into today. Let me know if the audio is all good. Let me audio check as always. All right, so I'm personally, so as you guys know, typically I'm gonna wait for the 10 o'clock. Like, so I don't trade the open, right? So if you guys are new here, I don't trade from like 9:30 to 10 when it comes to indices. I usually wait for 10 o'clock and then I usually see what happens post open. Now, NQ, I talked about it last night. I was thinking we were gonna possibly go up in here to the 25,800s. Waking up this morning when we were down here, and ES looked like we had just started to fade a little bit lower. It did look like we were going to possibly go here, but this is exactly why I usually wait for 10 o'clock close in order to identify the bias, right? So in the current time, obviously when this candle was forming, it was bearish, and then that's why I avoid the open, because sometimes you get these big spikes. Now, about 18 minutes to go until this candle closes, and I'll be honest, if this candle closes as like a bullish engulfing, then I'll probably look for potential longs. Now, I'm gonna take it a little bit easy as well because tomorrow is Christmas Eve, and if we're just looking at the 4 hour, we're just being honest with ourselves. It has been kind of in consolidation, to be honest. So we'll see what happens. Ideally, this candle kind of flips back bearish in the next 18 minutes or so, because I still like the downside gap fill. So I do like this downside gap fill. Let's just mark out this whole area in here. But obviously, like look at the 1 hour candle right now that's printing. We obviously took down these lows and then we're having a strong expansion move up. So same thing with NQ. Now, if NQ closes a 4 hour EBP, I'll probably look to see if there's any 15-minute fair value gap that forms. And then I would then look for that, 25,800s that we were talking about last night. So it really depends on this next 4 hour close in about 17 minutes for me to figure it out. Now, if this closes as like a doji, then I'll probably just sit out for the session, maybe come back for the PM session for 2 o'clock, and then kind of get it from there. But yeah. And also, like if you guys trade indices, this is my recommendation. Do not trade from 9:30 to 10. Will you miss some moves? Yes. If you want to trade, you could trade pre-New York. So if you wake up early and you trade around like 7 o'clock, sometimes you'll have a move from 7 to 8 or 7 to like 9. But if you want to like trade, but just don't avoid this time window, because I'm telling you right now, for most traders I've met, a lot of people get tripped off the open. So many, like even really good traders, they get tripped off the open because of volatility. That's why I usually like wait to about 10 o'clock to start trading for the New York Open, and I just avoid this session overall from that market open. Let the market trade, see what's happening. If there's nothing clear, wait for, maybe like 11 o'clock, 12 o'clock. If nothing's clear, then wait for like the 2 p.m. 4 hour candle. Okay, let me see if you guys have it. Check here, EU had a beautiful EBP play. Let's check that out. Yeah, nice little on the 4 hour. There's a beautiful 1 hour. Like this like, okay, so this is a really nice one, the 1 hour. I like when I see like when you see a big move like on Monday or whatever day, then you see the second day we just keep rallying higher, and then we're above Asia range. We're obviously above the prior day highs, and we're near like also prior highs in here. This is a nice little 1 hour EBP that you can trade back into the range, maybe back into this consolidation. And beautiful M15 fair value gap with the prior low. So we have the low fair value gap, unicorn, which is like a breaker. It's like when you have a breaker and a fair value gap combo. Beautiful. You could put your stop loss candle bar 2. If you want to be more conservative, you could keep it above the high. I like to keep it above candle bar 2. Beautiful sell-off. I'm telling you, man, all it takes is like one really solid trade for the day or for the week to really make to really have a sustainable income, especially with prop firms, because you can always just gain capital. Let me move the camera a little bit back as well. But yeah, so daily bullish SMT. Yeah, so NQ took out Monday's low. That's why, again, like if we create like this 15-minute fair value gap and we just keep that 25,800s, I'll be interested because so now the next 15-minute candle is forming. I really hope that it just doesn't rip. If it just rips, then obviously, like, I'm gonna miss out on this opportunity. But again, the opportunity isn't really presented itself based off my sub just yet. But SMT, because we took out the lows from Monday, and then we go to ES. ES obviously maintained higher lows based off Monday currently. We're creating an EBP candle, so this is looking pretty solid. And then yeah. Even gold, I think, had a nice little retracement on the 1 hour. Yeah, 1 hour EBP right there. No real retracement, kind of just open. You would have had to take that sell right off the open, but yeah. Again, just I wouldn't have shorted this to be fair, because when gold is in a trend, man, like I do not want to get in front of it. So yeah, we'll see. This is looking so far so good as the ABP. And if it does, and this 15-minute creates a fair value gap, now we have a very clear distinction. Like let's say this candle creates a doji like that, we create a fair value gap. I would probably look for that little bit of a dip buy opportunity. And it really should not go back beneath like this 25. I'll be honest, it really shouldn't go back below like that 25 640s if we create the M15 fair value gap. And remember this, and we close as a 4-hour EBP. In order for us to close, as long as we close above this opening price. So again, if you guys are new, an EBP candle is very simple. It's when the market takes out the prior bar low in a bullish example, and we close above its opening price. Same thing that's setting up on ES. This one looks, I mean, this one's just off to the races. So we'll see. Now, this is why it's so important for me to get a confirmation. I need to see a bullish setup when I have a buy. So like, look at last night. Last night, I said I was leaning towards 25,800 just because I've seen this before, where the market has a gap. We have some sort of SMT like we did in AES, and then we kind of continue higher going into middle of the week, and then we usually reverse. This happened like the last few gap fills because I keep data on this. So the last few gap fills, that's what happened. So again, I was leaning towards bullishness. Now look what happened overnight. This is why I don't trade London session anymore, because I mean, to be fair, there was a little bit of a nice little move here. Like there was this nice fair value gap inversion BPR in here after sweep of Asia range low. This could have been nice, but look what happened. There was no sustained move, and then the market ends up rolling over. So there would have been like a little bit of a pop right there, but not anything super significant. And even during Asia, I only trade Asia session from 7 to 9 o'clock. And this is Eastern time. I'm telling you right now, if the market does not move going into like, let's just say 10, then usually you're going to go through some sort of consolidation until London open. That's why, again, for me, like my time windows are very important for my specific systems and strategies, because it's been tested. Like for me, again, for my data, 7 to 9 Eastern time on PM Eastern time is great for Asia session for me if I'm going to catch a move. And New York open, I avoid the open because, again, imagine I was like leaning short. And then, you look at this fair value gap and you get absolutely steamrolled. And also the 10 o'clock, the 4-hour bar closes. So I'm trying to anticipate the next 4-hour candle if possible. So ES, that one's going in here. So we'll see. Again, as long as we close as the 15-minute fair value gap. I don't like it too when the fair value gap is really that big, to be honest, but we'll see. Now, we did create this, sometimes this is what happens. Like, so we did create this 5-minute fair value gap in here. We already traded back into it, so this might just send price higher, because look at that 5-minute EBP candle. Took out the prior bar low, close above the opening price. The next candle starts ripping higher above Asia range high. But we'll see. I'm going to wait for the 15-minute. But this might just rip straight off the open, yeah. We got Kimmel in the house. Oh, fuck. Hold on, guys. Let me get a napkin real quick. All right, I'm back. So yeah, so I'm gonna wait for this 4-hour bar. Let me know if you guys have any questions. Closing in about 9 minutes. I don't like when the fair value gap is this big, to be fair, because then the stop loss is usually big. And then honest, so that's the only thing I don't like, to be honest. When the fair value gap is this big, if it closes an imbalance and a 4-hour EBP, the stop loss is obviously gonna have to be candle bar 2, like I talked to you guys about. And usually, obviously, like that, the risk to reward gets skewed. So I might just wait for like a 5-minute confirmation. That's usually what I do if the fair value gap is very, very big. If we close as a 4-hour EBP, I'm gonna wait for a 5-minute confirmation, just because again, I want my risk to reward to be a little bit better than just like a dip buy into this area. Yeah, so hopefully if this sets up, I'll show you. It's very simple. Like, okay, let me show you guys like exactly what it is you want to see when it comes to any confirmation. Like you want to see, okay, so let you number one, you need to have some sort of like structure or some sort of like setup on the 4-hour, for me personally, on the 4-hour or daily time frame. So if I'm, let's just say we close as like a bullish EPP, right? Let's just use this as an example. Now, people always ask me, how do you get in on lower time frames to optimize your risk to reward? I don't talk about this in YouTube videos because it's like a little bit more, it's not complex, but I try to keep my YouTube videos very straightforward and to the point, right? Because most people are going to get a little bit confused. If you have the 4-hour EBP as an example, and you have a bullish bias because you think like the market on the daily time frame is trending higher, whatever, right? That's number one. Number two, it's very simple. All you need to do is on the next candle, on the next 4-hour candle, when the market starts retracing on the 5-minute, all you're looking for is the same exact type of structure. Like obviously when the market comes down to a support level, we're going to be trending lower. You want to see a market structure break, fair value gap being created. You want to see maybe a bearish fair value gap being inverted. All you need to see is bullish signatures. Now, for me, if I'm using a 4-hour bias, I usually want to see that on the 15-minute or the 5-minute, right? I want to see some sort of confirmation on these time frames. If I'm trading the daily, and I've said this multiple times, if I have a daily bias, I need a 4-hour confirmation. I used to use 1 hour, but I got 1-hour confirmation is not as accurate as the 4-hour confirmation. So that's all I'm looking for. So imagine, for example, we had a bullish bias on this specific day in here. Okay, let's just say, for example, we were bearish over here on this specific day, right? On the daily time frame. It's the same type of concept. Let's just say we were overall daily bias was bearish. Maybe we had a liquidity pull down here or some shit like that, right? All I'm going to be doing in this moment is I'm going to wait for this type of structure. Now imagine this was a 5-minute time frame, and imagine this was inside of a 4-hour bearish EBP or some shit, right? Look at all I'm looking for is something like this, like where I have a big drop, the DOL or the draw on liquidity still there, and then we have a fair value gap that's created with bearish market structure, right? Bearish market structure, bearish market structure. That's all I'm looking for. Now, imagine this was like, okay, for example, imagine we were inside of a 4-hour, a daily swing, right? Let's imagine this is obviously a 4-hour swing, right? So let's just say this is a 4-hour swing, and we think that the market has a daily like fair value gap that's down there, right? That's number one. However, on the way up, and you could use this on the 5-minute, by the way. This is so like imagine this is a confirmation on the 5-minute. So imagine this is a 4-hour swing. Imagine this is a 5-minute retracement. I know it's the same time frame, but just use our imaginations, just as a good example, right? I'm not going to sell the market when, right? Because right now on the way up, right, there's no real confirmation, right? There's a little bit of a rejection, but we tapped into this fair value gap, so market sends it to new highs. Right now on this current move up, we are showing bullish structure, right? I'm not trying to sell this off rip unless I'm very, very bearish, and sometimes then I'll just sell it and put a wide stop, right? But the risk to reward gets skewed, and I'm trying to optimize my risk to reward. Now look what happens when you get a confirmation like this. Now imagine this was a 5-minute or 15-minute time frame inside of a 4-hour swing. You get the EBP candle. Then this is the first signature of like we took out liquidity and we broke down below. Then you know that this might be the lower high point that sends the market to new lows. And in this example, it did. So if you get this entry on a 5-minute time frame or 15-minute time frame and you have a 4-hour target, that's how you usually get big risk rewards. So I'm actually recording a series. So yeah, see, like that's why I wait for the closures, because right now this might not close as an EBP. So let me see ES. Even if ES closes as an EBP, the problem now is that we took out the highs, and now we have SMT also with NQ. So this is kind of messing up the setup for me, to be honest. But you know what? I actually so this trade I actually took in here. So this is actually, I actually took this trade yesterday. So let me, just to answer your question about confirmations as well, right? Yeah, we had a 4-hour EBP yesterday. Okay. Okay, so we had a 4-hour EBP, and I said on stream I wasn't like a big fan of it, right? Because I'm like, all right, you know, it's we still have this gap down here. However, when we had this fair value gap, I got a confirmation entry right here off after stream. And what was the confirmation? This is something I would typically like. When I see the market tap into the fair value gap, take out some lows, we have the 4-hour EBP, which is pretty much swing low, swing high. So we have this clear objective. I just took this for a scalp right here, where I have confirmation because we created a bullish fair value gap and we created a inversion in here. So this right here is kind of like our BPR. So balanced price range is essentially when a bearish fair value gap gets overtaken by a bullish one. Okay, let me make this a little bit darker so you guys can kind of see that. Right? And then I got the fill. I pretty much got a fill here. I recorded this for YouTube. This is actually one of the challenge accounts that I'm doing as well. It's like a series I'm making. But yeah, but that's why I usually don't like, you know, the 4-hour EBP if it's like above, because you don't get big moves. But all I did was just take the entry once the market made new highs and we pushed to new highs in structure. I just took profit pretty much around here. Quick little scalp. So this would be considered like a confirmation entry, where you have a bearish fair value gap that gets overtaken by it on the remember on the 4-hour time frame. I use 15-minute and 5-minute for confirmations. So if this was a daily bias, I would want to see something like this on the 4-hour, where we sweep lows, we create some sort of a fair value gap or a balanced price range, and then we look for that retracement. And then you'll see the executions, maybe, let's see. Yeah, not sure what happened to the executions. Yeah, they were just there, but pretty much that's pretty much the entry right there. So yeah. So confirmations are very, very simple, guys. It's not like it's the same. All you're looking for is bullish market structure. If you're bullish, if you have a bullish bias on the 4-hour or you have a bullish bias on the daily, all you need to look for is some sort of bullish confirmation. Now, what time frame do you use it on? Oops, what's going on here today? But if you're on the daily time frame, for me, I'm using the 4-hour. I'm waiting for 4-hour confirmation. So if I have a bullish, okay, so even like euro, for example, or dollar yen, right? I said I wanted to see if this weekly EBP was going to hold, right? We had this daily fair value gap and price came into this area. Now look at the 4-hour. The 4-hour never confirmed any bullishness because right now we're inside of support, but we're not seeing anything because, and this is why, this is how to avoid trades. You can have a bias, but so many people get married to the bias. Look, everything is lower lows, lower highs. Like there's no reason to go long just yet because sometimes you don't know how deep the pullback is going to be. Now, let's just say we have this fair value gap. Maybe we just trade in here, we create a bullish one, we come down, and then we break back to the upside, right? Now I can get in on bullish market structure to the EBP candle high, right? So think about this. The market is going to go bearish to bullish, and it's really that simple. The hard part is the waiting aspect because sometimes you have a bullish bias, you get impatient, you just try to buy this big fair value gap without any confirmation, right? Even though on the daily time frame we just close that that area in here, and now I'm going to wait for some sort of bias to kind of confirm, because on the weekly EBP is still valid, right? This is just a little bit deeper retracement. Like if we draw the swing low to swing high, range divider, we just hit the 50% mark. So this is still valid, but most people, they'll see this big drop and they'll get discouraged. They might have taken a stop out because they just try to buy before any confirmation, you know, and then they're like, oh my God, like, and then they might see it rip later on in the week and then they get upset. All right, so yeah, this, I'm not gonna lie, it looks like indices might just be chopping for the day, man. I'm personally not gonna take any risks on this because it's kind of like giving, yeah, I don't like, so we think about like, this is how you know when this is, okay, so people also ask me, when should I avoid confirmation? When should I avoid, how do you know when consolidation is going to happen? You don't really always know, but for me, as soon as I start to see this type of price action, I'm usually like not a big fan of. So look how Asia range, we took out the low, we took out the high. then we made new lows, and then we made new highs. So for me, this is, and we also have a bunch of SMT as well. So look at NQ, the fact that we took out that high and we have SMT here. ES took out its Monday range high. Like for me, I am not going to be a big fan of this type of price action. So I'm probably just going to keep it safe. Again, it's the day before Christmas Eve. This was going to be my last trading day, to be honest. And yeah. Okay, guys, give me 1 second. Let me just, I got a phone call I got to pick up. All right, yeah, sorry about that, guys. But yeah, so yeah, this is why, again, when I see this, like, look, because now people will see this fair value gap and they'll just try to like look for longs, but you have to fight the urge to take trade just because you're waiting, right? Something could look good, and then when you have the 4 hour close, it doesn't look good anymore. Like again, we have this SMT over here, and this is pretty significant. And look at that, we're not even really respecting this. I will say this: if I will be interested, I kind of want to see if we're gonna have any failed bounce. Let me see the 5 minute time frame. If I see like bearish 5 hour structure, I'm sorry, 5 hour. If I see bearish 5 minute structure, I might tempt a long. I mean, a short. If we have like a push up here and then fail and then start to create bearish market structure, because right now we're inside of this, we're closing on this fair value gap, and I don't want to just obviously like just sell. I want to see if we can have like some sort of push here, and then because I'm still interested in this gap, to be honest. I'll use the bodies of the candle here, which is gonna be my first objective. Okay, and let me clone this. Yeah. So if we can get like, see how not right now we're reacting. If we get like a false push up and then we break back down with the fair value gap on the 5 minute, I am going to start looking for, I will probably just take sales on that. Because again, NQ did not close and did not close as that EBP. You also have pretty significant, what's it called? SMT. If you guys are not familiar with SMT, it's like a Kraken correlation. So notice how ES took out its high, NQ did not take out its high. And to be honest, the only reason why I'm also leaning bearish is because if you look at the daily time frame, we're above prior day highs. We're above the last week's high as well. So we're above liquidity pools with a clear fair value gap to the downside. Well, not fair value gap, but a clear gap to the downside. Now, the bias in the framework is set. I just need to see M5 or M15. I'm going to use M5 because sometimes M15 you'll miss the move. I just need to see that this fair value gap doesn't hold. So when I like this, what I like to see is I like to see sometimes when the market has a reaction higher, right? And then we break back down, because to me, then it indicates that this fair value gap is weak. And then I can easily, like if there's a bearish fair value gap that forms in here, now I can look for that lower low. I have the high as my stop loss, because now I have a predetermined entry. The problem is if I want to short this, like where am I going to place my stop? Can I just place a high of day? You can, but there's such a wide stop. The risk to reward for me doesn't make any sense. Yeah, like even on the 1 minute time frame, Yeah, this looks like one of those things that is going to fade off into these levels. Sync and layout, yeah. Let's make this a little bit darker. All right, yeah. So I'm gonna wait for that 5 minute. To be honest, it might even I might be a little bit aggressive on this one, to be honest. But I'm pretty confident that we might gonna head down into here. Okay. All right, guys, give me 2 minutes. Just have to make back this phone call. 1 second, guys. All right, I'm back. So yeah, let's see if we can get this set up here, honestly. Okay. Do, 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 do. Good question. Why you not wait for 4 hour? Well, this to me is kind of confirmation based off of the 4 hour wick above the high and SMT as well. So for me, and mind you, the next 4 hour candle is not till 2 p.m. So I get what you're saying, like waiting for a bearish 4 hour bar like that forms as a confirmation, but the SMT already kind of confirms it for me, for the bias at least. Now all I need is just a 5 minute structure, like a bearish structure, right? So we have now this just a small impulse leg. However, we're inside of this swing high to swing low, I'm sorry, to swing high. So if we get a fake rally up or we get a fair value up that forms and we get like a bearish reaction, I'm going to be interested in sells because to me, based off we're above prior day high, we're above prior week high, we are inside this fair value gap, we're inside of premium, and we have this gap in price that has not been traded to yet. Right? I'm using the reason why I use that whole area is I like to use the bodies of the candles before that area because the bodies sometimes you'll have a reaction, then the market will pull back up. So if we form a 5 minute fair value gap in here, I'll probably look to take this sell, to be honest, as a very like mediocre, smaller position sell, but we'll see. But we'll see how this one closes in 15 seconds. Good question. Why not look for shorts on NQ? I'll be honest, it's more so because like NQ, we're kind of I don't know, like it's this weird thing about me. Like I need to see a draw on liquidity. So I have this draw on liquidity here. NQ, I don't really see a draw, right? Like I guess the closure of the 25.59, but they'll both have a reaction lower. So we'll see. Now we have that fair value gap. Now what I want to see is what I was saying earlier. Push up. I want to see this fail, and I want us to create some sort of like high in here. So we'll see how this one plays out because right now we're inside of this overall swing. Now an aggressive entry would be like right there, stop loss like maybe there. Let me see how much that risk reward would be. Like the risk reward, let's say just a little bit above that. Risk to reward would be good, about 3.36, but it's a little bit more risky on this side because you're still combating this, but yeah. But here we have the fair value gap that's present on the 5-minute. We've already inverted this one in here. So we'll see if the market continues bearishness. See, and this is usually the type of reaction. The reason why people always tell you to put the stop loss above the high or whatever. I always say candle bar 2 because, bro, like if this fair value gap is going to send price lower, you don't want to really see it up here, right? Like you should always have these type of reactions. Now, obviously, still 3 minutes of the candle closes, but you want to see these big aggressive reactions at these levels, especially when the market already took out stops. You don't want to see big pullbacks. Okay. Now, something that would be nice, especially as you get that closure below, and then you start to see the bearish structure. Because now in the 1 minute, you see that little bit of an inversion if that 5-minute closes as a bearish EBP, and now you have bearish structure to possibly head a little bit lower to the downside. Still about 2 minutes left for this candle to close, but I'm just trying to walk you guys through the whole process of anticipating structure, anticipating these levels holding, and when do they hold the best. All right, beautiful reaction. Again, guys, like I want you to take note of that. Every time you enter on the fair value gap, you ideally, obviously not always, but it's not gonna happen, but ideally you want to have an aggressive move like this, right off the grip. Like if the market taps into it like 1 or 2 times, no problem, but you don't want to see it meander or hang out too much in that area. These are obviously the best case scenarios where the market comes in, you get a nice reaction, and then you start to see price heading in your favor. Whoops. Yeah, sorry. I always forget to like move these out the way. Yeah. But yeah, in regards to that 4-hour question, because I just saw another person ask me the same thing. Yeah, like again, I don't need a 4-hour confirmation. I know like people see this as an EBP and they'll just, but that's the thing. It's just the narrative. Do I want to buy an EBP candle when the market is above prior day highs? We have bearish SMT and we're above the prior week high. No, even if I don't want to like look for shorts, for example, I would never take this long with this framework in mind. And this is where like you need to graduate from just looking at an EBP candle by its nature and then putting it within context, right? Like an EBP candle is going to have serve one of two purposes, right? It's going to serve one of two purposes where you're either going to look for a continuation, right? So like, let's just say you want to look for an EBP somewhere here for a continuation higher, or let's say the market is trending one way and then you see an EBP candle, like a bearish one, and then you look for that reversal back into maybe a fair value gap. Those are the only two cases I pretty much use EBP candles. Clear continuations at higher low points or lower lows, and then also look on a reversal profile. Yeah, so again, Bilal, so NAS is weaker, why short ES? I don't know, maybe it's like a mindset thing. Oops. Because for me, I see this gap in price. So it's like in my mind, I'm like, I know that there's equal lows here and there's gaps in price as well. So I want to look for that move down to that area. Okay, let's go back to the 5-minute closer. So they didn't close as like an EBP, but again, as long as this bearish fair value gap holds, and again, remember, candle bar 2 is going to be pretty much there. You really want to see it have like some sort of aggressive sell-off on the 5-minute time frame. Let me check the 15-minute as well. And the reason why you want to see like that push and then failure on the like 5-minute basis, especially like when we get closures below these lows, is because when you look at the 15-minute right now, we're kind of inside this overall swing, right? That's why I said swing low to swing high. The market comes down to this area, you're going to usually see a reaction, even if the marketplace is going to sell off at some point. So you want to, again, this bearish fair value up needs to maintain in order to kind of have that significant move run lower. So we'll see what happens here. Next 15-minute bar open. So this could be a power 3. So where this candle opens, rallies, right? And then we have a candle like this or a candle like this. So we'll see how we react over here. Excuse me. I'm stuck on break even my buy, so I go back, get fucked with entries or fear missing opportunities, which affect the amount account. I need advice. I mean, listen, man, I actually have a video coming out. It was supposed to come out today, but I got pretty sick last night. I'm still a little bit sick now. I would say this, man. I have a video coming out specifically on this, but you need to treat your trading like a business. Like, for example, if you have a very specific setup that you want to trade, you need to have it outlined exactly what you're going to do every single day, when you're going to be in front of the charts, etc. So like if you are someone who like kind of like struggling with missing opportunities or whatever, number one, you have to outline what sessions are you going to trade, right? Like what sessions are you going to trade for the day? So for me, I know I'm trading 7 to 9 o'clock p.m. Eastern time for the Asia session. I'm going to check out the charts, and then I'm going to check going into 10 o'clock as well. So if I know I'm going to, hold on, I think I'm going to take a little bit of a position here, to be honest. So this is actually my challenge account. I'm not trading any like the funded. I'm up about $1,000 on this account. This is a 50K account with Fundednext. Let me just see how much the stop loss would be here. Yeah, so let's do that. And let's see the TP. If I put a TP here. Now this is a little bit more aggressive, so I'm actually only going to do one contract for now. And then I'll look to try to add if we kind of go back below this area. Well, actually, I'm going to wait right now. I'm going to wait and see, because I don't want this to invert this bearish fair value up, but it's inside of this overall bearish swing. So if I draw this bearish swing in here, right around the 50% mark, I'll take a stab at it. I'll take a stab at it. I'm just going to put my stop loss above that inversion. Let's see if we can get that little bit of move down in here as well. Now, again, this is going to be fairly aggressive, to be honest, because the 15-minute structure is still overall bullish, but I want to take a small position. So my full risk on these accounts right now, because I have $1,000, is typically going to be like, $700. Because this is not like A plus setup, and because I'm entering a little bit early, I always cut my position size in half. So the risk on the trade, as you guys saw, was like, typically I'm taking $700 risk, 600, 700 on the challenges, right? Because this is fairly aggressive, because I'm taking that first pullback up, right? Anticipating that maybe we form some sort of high in here, I'm usually reduce my risk to half. So that's why right now the risk is about 350, if I'm not mistaken, about $300 risk. So it's 0.5 R. Now, I'll typically do that because if we break back below down here, what's going to happen is if I get, let's say becomes like some sort of like a run on stops, right? If it becomes a run on stops and then we break back, I can always just add another position. So we'll see how this one plays out. Excuse me. All right. Do you still sit back on Mondays? To be honest, not really, because now the thing is this: I've tried to add more setups to my arsenal when it comes to intraday scalping. And I realize like if I'm the thing is I don't hold any really big positions on Mondays. That's typically where I'm at right now. I don't hold any big positions. I'll maybe like look for like smaller scalps and stuff like that on Mondays. But that's about it. But Mondays, like I tell myself, excuse me, guys. But yeah, sorry about that. I'm like catching a cold here in like New York. It's like pretty cold out. But yeah, Mondays, like I'm not gonna hold any like long-term positions to be honest on that. All right, so we'll see how this one plays out. A little bit aggressive, we did invert this, so but as long as we don't come back above here, we'll see. Yeah, bro, Paladin is fine. He just, bro, he just wants to pursue something else. He's very young. He just wanted to pursue a different like path. He didn't really like want to be like in the trading space too much anymore. So yeah, he just went on ahead and pursued something else. There is a 4-hour EBP candle. Why go short? So again, like as I said earlier, I just think that the bias is going to be to the downside because we do have this gap down here. We have, if you go to NQ, we do have SMT at the highs. So yes, I am fading the bullish EBP, but I think from a higher time frame perspective, we're going to possibly come back down into this gap. Now, again, maybe this is the thing. That's why I always tell you guys with the EBP candles, like you could play scalps like this. This would have been a nice little bit of a scalp move higher, but I'm looking for like a bigger picture move, like a higher time frame bias move, which is this gap fill down here. Now, again, I could be wrong, and then this could just rip higher, but that's like again, like if I'm going to follow my higher time frame play, it's typically going to be if I'm going to follow my higher time frame play, it's going to be that, you know, because we're above prior week high, we're above prior day highs, we're inside of this overall gap, we're inside of a premium from swing high to swing low. And again, if this ripped higher, then that's perfectly fine. But I tend not to play longs when the market is above like key liquidity pools, we have SMT, etc., and we have a downside gap. Now, I'll be honest, I'll look to add to this if we form a lower high. So this swing in here, if this ends up failing, like let's just say we have a big significant like we trade like this and we have like some sort of bearish fair value gap, this would have been the safer entry, right? And that's why I showed you guys reduced risk. This is a safer entry if we kind of like fade off and create a bearish fair value gap, and then we can look for that little bit of a downside move. I'm entering a little bit premature just because again I want to have some risk on just in case that does happen, but we'll see. I'll let you guys know in the Discord, to be honest, when it comes to because I'll be honest, like right now, like this year, like after I came back from during the summertime, I had a lot of obligations and stuff like that, but like now things have cooled off significantly. So any announcements on that will be kind of will be posted inside the Telegram. Yeah, this is kind of like the last line in the sand for me right here. Yeah, what is sells. So right now, man, I'm hoping that this kind of like holds this structure right here. We start to form a lower high, and then I'm gonna look to try to add if we get like another failed if this breaks that back below, then this is going to be something I'm looking for this gap fill in here on ES. So someone asked me this yesterday. My frequency of trades, honestly, it depends. Sometimes, depending on the week, it might be like anywhere 5 to 10 trades. So about 5 to 10 trades typically is going to be the frequency on average. But sometimes it will be more depending on depending on like if the market has multiple opportunities. Because again, I watch multiple different things. I don't only watch ES, NQ, gold, etc. Like I don't watch. I'm sorry. I watch multiple things. I watch euro. I watch dollar, yen. So, but primarily my focus is NQ, ES, and gold. So if I'm watching multiple things, I'm gonna have multiple opportunities just because some opportunities might lie on Monday, some might lie on other days as well. Um, what's your view on BTC? Honestly, where's BTC? Let's go. I don't know, man. Like this has been in such a big consolidation. I do think that, like I talked about this before, I do think indices and well, not indices because Bitcoin. Let me just talk about Bitcoin. I think based off the quarterly time frame, next month might be bearish, down to maybe like 70K. Like even the new year, I know this is a 12-month chart, but we have a fair value gap around 74K. I think that's where we're headed to next. Now, do we rally up first into this fair value gap? I don't know, but I do think we're going to take out that 74K eventually. All right, so let's see what happens here. Now, we do have this bullish fair value gap, so that's something that I'm mindful of as well. Because if it's going to end up like being higher, this fair value gap with this BPR will ultimately hold up and stuff. Now, someone might ask, then why wouldn't you just close it? Well, again, I'm going to have my bias when it comes to this 4-hour time frame. So yeah, like for me, it's like once I have the bias and stuff like that, I'm most times than not, I'm just going to allow it to play out. Now, for me to add or something like that, I would just want to make sure that this fair value gap doesn't hold, and then we kind of fade back below it. What indicator would you recommend? There's like I think it's called, let me see. You can use this one. ASFX, EMA's, ADR, Asia range. It has multiple different ones. Just take everything out and just put Asia range. It's by this guy, KC Blue Mercury. If price breaks the high, I don't know. The thing is this: if it breaks the high, like we're still inside of an overall premium, and we're like for me, the thing is this: if it breaks and makes new highs, like I'm just not going to take any more trades on this, to be honest. Because if it breaks the high, right, like it could still end up like having. The thing is this: when you leave this downside gap, there's going to be some level of. We might revisit this at some point. If we break a back above, we're still inside of a very high premium. I don't like buying when the market is up too high, right? Especially with SMT that we have on NQ. So if it were to break higher, like that's fine, but it's just the thing is this. Sometimes I think people think you have to be in a trade, right? The thing if the market broke to new highs, then yeah, that's it. Then I'll just not look to enter long because the thing is this: I don't want to flip long and then maybe the market tops out again, you know? But that's just me personally. What is your spy? I think it's like $300, so it's 0.5 R. Let me see if I could change that. Yeah, I'm not sure why it doesn't it shows just the buy stop. It's it's 0.5 R because the positions in the bracket says money. Yeah, I don't know why it's not updating. But yeah, but it's pretty much 0.5 R. I want to look to add to a position if I can kind of get a breakdown below, like let's say here, and we see bearish structure, but we'll see. Yeah, good question. So a lot of people are asking me this. It's only because maybe I said like earlier, maybe it's like a psychological thing. When I see a gap that has not been filled, I like to trade that asset more. So yeah, you guys are right, absolutely right. NQ, oh, that was BTC. NQ is definitely weaker, right? But for me, it's like if there, I don't know if I just when I see a fair value gap or a draw on liquidity that has not been met yet, like we have here on ES, I don't know. I just want to like trade that one. Again, maybe it's like a psychological thing, but All right, so I don't really like the fact that this kind of wick, so I'm gonna give it like one more chance above here. We can, but yeah, because sometimes you will have a wick. Um, this is a good question. So how would do I know if something is a liquidity pool sweep or if it's just making new highs in structure? This is gonna require like a full-on video, to be honest, because like it really depends on multiple situations. See, like this is why I said like I don't really like that wick in here, because like usually if like the market is going to come into that fair value gap or some sort of area, I wanted to see it kind of just like fade off and inverse it right away. But we'll see. It's kind of like last minute, yeah. Like you usually don't like to see this type of reaction once the market is like reacting at a fair value gap, especially if like you're looking for sells on a premature entry. But honestly, I'm just gonna like let it be. But to answer your question, if the thing is this, if um if I'm looking for a bullish market structure, for example, if I'm looking for a bullish market structure and the market takes out, like let's say the market takes out, like, you know, obviously when we make new highs, it's going to be one of two things. Is this going to be a market structure break, like so back to the upside, and then we're going to continue a trend, or is this going to be a run on stops? The way that I personally do this is like if I have, it depends. So like if let's just say we're inside of a bearish swing on the higher time frame level, right? And then on the let's say there's a fair value gap or something like that in here. Then on, let me get this a different color. Right? So then let's just say this swing is like a daily time frame, for example. And then on the lower time frame, let's say this red color is like a 4-hour or 1-hour swing. If I see like a market structure, like most people see that 4-hour new high as a potential like bullish market structure. There's a chance that if the daily is bearish, the weekly is bearish, and then the 4 hours making new highs, there's a chance that that could be some sort of run on stops. So it depends on the time frame higher above it. Is like the simple answer that I can kind of give you. That's why it's like it depends on the situation, depends on the scenario. Yeah, so that's why I said early on, like this entry right here was based off of like very premature, and that's why I took 0.5 R, because again, I just want to take a position around the 50% mark just in case, right? It is pretty aggressive entry, right? However, like I'm looking to add the full size if we like the other contract if we were to flip this. And that's why I said like I didn't like the fact that we kind of like wicked back above it, because that typically indicates like some sort of strength. So this doesn't look that good anymore, to be honest. But it's like right near stop loss, so I'm just gonna allow it to like either hit the stop loss or maybe the market just flips. But usually in this type of situation, um, yeah, I'm gonna wait for that to like. So now imagine this ends up flipping and I'm still in the trade. Then I would look to add. It's kind of hard to show, but like imagine the market broke back below. Then that next retest, especially if we close below this low, this is gonna be the key pivotal low. The market has to stay below if we're gonna even get back to the downside. But that's why I said like earlier, this looks like it's gonna possibly just push or like stay up in the range. But see, like in this moment, I'm either gonna let it hit the stop loss or yeah, like I wouldn't flip, because a lot of people will try to flip bias and stuff like that. I have a very strict rule. I don't flip and I don't really move my stop losses. Because again, if this flip, like let's just say, imagine you flip long and then this ends up being just like a little bit higher retracement and breaks back below, the emotions kind of kick into play. Yeah, yeah. So I'm working on these videos, guys. Yeah, I have one coming out tomorrow and then another educational video coming out as well. Yeah, this is not looking good at all, but we'll see. It's like flirting with that stop loss. Crazy, man. This is why they say don't fade the EPP. Funny enough, like it actually did confirm like the EBP candle. Like when I was just talking to someone earlier about like the confirmation on the EBP candle. This was actually that confirmation where we have like a bearish fair value gap gets inverted. We have a bullish one as well, and then yeah. Yeah, this is like almost guaranteed. Yeah. So stop loss got hit right there. So the account is, again, this is why. Let me go to the account summary. Yeah, so the P&L is only minus 255. So that was like less than 0.5 R. So because I'm risking on this account right now, $700. This is the challenge account. So right now the challenge account is up 843. A minus 250 is not really like, yeah, it's like a very minor loss on this. So we'll see. Now again, that's the reason why I did short it with like less size, because it is, I even said like it's fairly aggressive short, trying to short the front side move. Now could I have I exited right there, to be honest? Because you know what it is, because I was risking only 0.5 R, I usually just like to let the trade play out in that situation. But yeah, we'll see. Funny enough, like the EBP on the 4-hour time frame actually did just that was just the play. Let me remove this so the chart's a little bit cleaner. Yeah, it was conflicting with the bullish 4-hour EBP. It's just, I don't know, again, like for me, sometimes like if I see a higher time frame potential, like if I see that this could possibly get hit on this and we're inside this fair value gap, we have SMT with NQ, right? Like for example, like look at NQ. NQ did not take out Monday's high and ES did. Now, maybe I get wicked out and then the market does topple over and we don't make new highs. I don't know, right? But I'm not going to re-enter this. But, sometimes like, yeah. It also goes to what I was saying earlier. That's why sometimes I do like waiting for a 4-hour confirmation towards my bias. But the problem is the next 4-hour candle's at 2 p.m. And if this, let's just say this faded off, which again, over time, like you guys will see what I mean. If this had faded off, like let's say this faded off all the way down, and if you wait for the next 4-hour bar, it's not going to like happen. The next 4-hour candle is going to be 2 p.m. and you might miss the move. So that's the reason why I took like again. But if I do take an aggressive entry, I always take half an R. So if my full R's are usually about $600, $700 on this account specifically for the challenge, right? I'm going to go ahead and I'm going to risk half because I know it's aggressive entry. So even if you take out the stop loss, if it gets stopped out, it's fine because you're like minus 0.5 R. The buy stop above the zone, no, that was a stop loss order for the sell, and it was above like this imbalance, this inversion. No, I agree. You better sit on your hands because it's conflicting. I agree. But sometimes you guys get on, like sometimes you get on stream, you want like a little bit of action, And again, like this wasn't on a funded account. Like I don't really take these types of trades on funded. Like evals and challenges, sure. Because again, I have two current challenges I'm working on. They're both up just about, well, this one's up 950, the other one's up 843, right? So I'm trying to work on these challenges and stuff like that. So like usually when the market, if I subpar trades, I usually will not take on like the funded accounts. Challenges, because I'm trying to pass these, sometimes I will take a chance like that and then look to add to positions, etc. But it's just funny enough, like the 4-hour EBP, we had the fair value gap, candle bar 2, and then we actually get the confirmation right here. That is one thing I'm going to be journaling, is like I definitely should have taken like maybe not flip long, but I definitely should have like exited when I had this 5-minute candle close like that. Nah, man. Like the one thing I learned about gold, it's very risky to short gold when we're making new all-time highs. Like if you go study like gold back in this time window right here, anyone who's tried to constantly short it, like dude, it was very difficult to short intraday. Like when you have to short like near the highs. Like now, I would not take this personally. It's very risky. Yeah, it would be too risky for me. Good to let it play out. Allows more screen time, understand market conditions around your setup. Yeah. And again, like it was only 0.5 R risk. That's the thing. Like for me, I'm comfortable like letting things play out. Like if you're putting on a lot of risk on a trade, that's when people usually make emotional decisions. But yeah, now it's kind of off to the races. Funny how I always say don't fade the EBP, and then because based off the EBP candle itself, a little bit of retracement down below the 50%. The fair value gap was present in there, and then the confirmation. This is actually a very nice long setup, ironically enough. Now, do I regret like the bearish bias? No, because I've seen this so many times where, again, like if we have SMT at the highs, like we did it with here, and now again, maybe NQ actually recovers and then comes up back up in here. But do I really want to take another long position? No, because again, like for me personally, it's Christmas Eve is tomorrow. This to me is consolidation. I don't want to take the risk of, yeah, of taking another trade on these. They can leave that gap going to New Year's, honestly. Yeah, that's true. Like look at this gap. This gap never even filled on NQ. Like there's one right up here. Right here. This gap never got filled. This was actually from last week, I believe. The week before. That never got filled. Yeah, honestly, like I'm like in hindsight, I wish I just the thing is like when being in the position right there, you kind of I only saw like I didn't want to flip bias to be honest. Even though this was like a perfect confirmation long. So like someone who asked earlier about the confirmation, right? This is a good example of that. This is a good example. So when you have this, like a bearish fair value gap that gets overtaken by a bullish one, right? This is usually some sort of like good confirmation if you're looking for like some sort of long setup. And that's what happened here. And I even said on the thing, like, you know, the fact that we close above here, I'm like, I'm not a fan of that. But again, just because it was 0.5 or I'm just gonna allow it to just play out in that situation. Yeah, no, I'm going like that's honestly the goal is to constantly do like these live streams going into the new year as well. You'd be surprised. You'd be surprised how long they could extend this. The thing is, like with indices, indi- indices over time is like prime to go up. But yeah, let me see this on the 15-minute time frame. But yeah, guys, that's probably it for me for the rest of the year. Unfortunately, on a losing note. But yeah, again, this is the thing. I know like a lot of you guys want to like try to chase the continuation on indices. I will say this: just be mindful because this could just be consolidation. Like how do I know something might be consolidating? You never know for sure, all right? Because like this might just rip overnight, or this might just rip, like later today. When I see multiple like wick highs and wick lows, very similar to ES, wick highs, wick lows. Even you could see it more on the 1 hour time frame where the market takes out lows, pushes up to new highs, then drops lower, then drops higher. I usually don't like trading this market condition because it could look bullish now and then it could just go back into the range. Like if you didn't catch it, in my opinion, if you didn't catch something around here, there's no point of trying to risk it for a deeper continuation. But yeah, I think that's gonna be it for me. It's 10:45. I have to go start doing other things. Happy holidays, everyone. Hope everyone had a great trading year, great trading month. I do have a video coming out again going into tomorrow as well. So it's gonna that video is gonna if you're struggling with let's just say some sort of psychological issues, that video is gonna help you drastically. So peace out, guys. I'll see you guys all in the Telegram and happy holidays, everyone.